typically we've seen in times of war that there's a flee or a flight to gold. But since this war in Iran has broken out, we haven't really seen the reaction in the gold price. Why do you think that is?
You know, my dear departed friend Jim Sinclair used to say to me that it is MOPE, MOPE. It is management of perception economics. Management of perception economics, he used to say. And so, you know, one explanation is that it is just managing the reality of what is happening. But to me, Kyle, the louder the negativity gets, to me, the more bullish it becomes. Because I would argue that gold has not broken trend at all. It's nothing more than weak hands getting flushed out and emotion replacing perspective. And we've seen this at every meaningful correction in this bull market. It's the same amount of fear, the same amount of bad calls, the same result is that the metal continues to move higher. These pullbacks are not failure. I'd call them a pressure valve release before the market leg, the next market leg goes up. I would say do not confuse consolidation with the end of the move. You know, you can look at, there have been ways that this is sold off in a non-organic way. Recently, the BIS, and I'll use silver as an explanation because they talk specifically about silver, but they said that the worst sell-off in history for silver was, as they put it, give you the exact term here, accelerated by the growing footprint of retail investors in leverage exchange traded funds. So you had all these levered ETFs that along with massive margin increases on the exchange, which was done to force speculators out of the market. They jacked up the margin rates, which we use to hedge our inventory. But if you're a speculator, you know, you can post a little bit of money and have 20 to 30 times the leverage in what you're holding. But if they continue to jack up margin rates higher and about 300%, you have to post more margin just sitting in your account. In silver, around December 1st, we needed somewhere in the neighborhood of $15,000 to hedge against a 5,000 ounce inventory. In other words, 5,000 ounces per contract, COMEX, was $15,000. If I have 2 million ounces in my warehouse, which I typically will, you got to have a lot of money in your margin account just sitting idle as collateral. The day after Christmas, it went up 35% to 18,000. By January, we were talking, or February, you know, as the market collapsed at the end of January, we were talking over $50,000 in your margin account to hedge 5,000 ounces of silver. If you don't have $50 million in a margin account, you're not going to be a major bullion company. And so that selling, as the margin rates go higher and higher and higher and higher, it squeezes the big speculators who have to post more and more and more and more, just let it sit there. So they sell, and selling begets selling, begets selling, begets selling. But what is betraying, Kyle, all of this? What is betraying the price are the deliveries. So far in gold, the deliveries in March, we've seen 9,698 contracts delivered. That's 969,800 ounces of of gold. Silver contracts, so far we've seen almost 41 million ounces delivered this month. And I guess what I would say to you is that what betrays everything, what betrays the ability to manage perception, as Jim Sinclair says, MOPE, manage perception of economics, is the amount of deliveries we've seen for 16 straight months. Since Trump won the election a year ago, November, every single month over month over month over month over month over month over month, we've seen billions and billions and billions worth of gold and silver delivered to COMEX. Now, you know, they used to ask Wayne Gretzky, how the hell were you such a good hockey player? And he would say the same thing over and over again. I never skate to the puck. I skate to where the puck is going. And that's exactly what these people are doing. These are the biggest money in the world. These people are the most well-informed money in the world. And, you know, when you see the deliveries happening, so when they raise margins and force everybody out, well, here comes the big deliveries. I don't use margin if I'm a sovereign wealth fund or if I'm a government entity, or maybe I am Secretary Bessent acting on behalf of the Exchange Stabilization Fund, where if it is for national security, don't tell anybody. I don't have to get congressional approval. I don't have to tell anybody because we are doing this for national security. Now, we've seen the same thing with silver. 16 straight months of billions and billions and billions and billions. See I already told you, it was 40, what did I say? Silver, 40.54 million ounces so far delivered in this month. In February, Kyle, when metal is delivered into the COMEX, uh, it that doesn't mean it's leaving, right? There's two categories in COMEX. There's registered, there's eligible. Registered is about like 78 million ounces, I think, something like that right now. 78 million ounces in registered. Those are the bars that stand behind the contracts. The eligible is much bigger, but the eligible isn't for, like, I have 8 Brinks facilities that we control, one of which is in New York, JFK. That's a COMEX facility. That's the only one of the 8 that are COMEX. And I have clients with millions of ounces in silver 1,000-ounce bars that they hold in our storage program. Those are not for sale. That's eligible. Well, they could be. They are eligible to be registered. The registered category is the category that the bar is back. Now, in February, which was a non-delivery month, you can take deliveries. It's not a priority. The delivery months were like January and March, May. February is a non-major delivery month. We saw about 25 million ounces of silver delivered in the month of February. Delivered. So normally these contracts roll over. Most of my career, 35, 36 years, 1% or less of contracts stood for delivery. Massive amounts of delivery over the last 16 months, which in and of itself, the media has totally missed. Doesn't matter what the hell the price is doing. Who's standing for delivery? That's all that matters. Who's doing this? Who's spending 9 figures every single month? But in February, about 25 plus million ounces, call it at $80, $2.5 billion again in a non-delivery month. But that's one thing.
So who is it?
Well, that's one thing. But real quick, 38 million, almost 39 million ounces said bye and drove out of the exchanges. Now, when you take 39 million ounces out, nearly 38 plus million ounces, you're talking 2 million pounds of silver. You're talking 160% of the February delivery, which could be explained through delivery, left. Where'd it go? Who took it? Who's running logistics for that? The armada of semi-trucks driving down the street in Manhattan? Who's doing that? Who's got the insurance? Where is it going? Now, do you think, as far as silver is concerned, that there's any correlation, or is it just complete, as Trump would say, complete coincidence, right? That after all of these deliveries every single month, and some of it leaving. Now, once it leaves, by the way, once it leaves the registered or eligible category, leaves COMEX, the only way to get it into the ecosystem is to drill it and assay it at an incredible expense. So you just pulled out, 200, what did I say? 38 million, almost 39 million ounces of silver in 1,000-ounce bars, and you want to get them back in for liquidity purposes? Well, that'll be a big job and lots of money and lots of time. But once it leaves, it's gone. Now, do you think there's any coincidence that we've seen this unabated every month since a year ago, November? And just by coincidence, President Trump says, by the way, last month, silver is now a critical mineral for national security. And they did something called Project Vault. We're gonna stockpile these critical minerals, and we're going to sponsor a price floor underneath it to incentivize domestic mining. Who do I think it is? I think it's the Exchange Stabilization Fund, if I had to guess. That's the Treasury. For national security. Don't need to tell anyone. Don't need congressional approval. This is for the safety of the country. How else can you explain this stuff? So all I would simply say to you is that when stress shows up in this market, it doesn't show up in price first. It shows up in delivery. And that's something that is so unusual. It's 4 feet of snow in Death Valley in July. Last time I drove through Death Valley, I didn't see any snowmobile dealerships up and down the road, but 4 feet of snow there. Would they do it? I doubt it, because it's an anomaly.
So
and that's what this is.
How about the gold side of it? You said 38, those numbers were for silver. Are we seeing the same kind of?
We are. I don't have the exact numbers. I can tell you that just last week,
It's happening.
Friday,
16 months, month over month.
Yes, last week,
the Treasury
Friday, we had 104,844 ounces of gold left last week, Friday. And
what do you think? And what do you think they're doing with all? Like, what's the purpose? What's going on?
Well, silver is needed for a strategic stockpile. We don't have any.
And you think that's mostly, you think that's economic reasons, or you think that's industrial reasons?
I think it's mostly military reasons, but it's also all of the above.
But when you say military, does that mean industrial, so like manufacturing, or is that?
No, there's massive amounts of silver used in high-tech weaponry. When you talk, hypersonic missiles that are going Mach 7, there is very few, if anything, other than silver applications that are both conductive to electricity and whatnot, but also resistance to that heat that will work. So in the cones of missiles, in F-35s and stealth bombers and submarine, all this stuff, there's massive amounts of silver needed. And the military industrial complex, if you take this, if you start to take derivatives of all this, well, who are they? You could argue it's BlackRock, right? They're the company that owns all the manufacturers. Who is the custodian of the world's largest silver trust, SLV? Well, that is a co-custodial deal between BlackRock and JP Morgan. So JP Morgan, who paid a $920 million fine to the Justice Department a few years ago, the largest that they'd ever handed out ever, well, they, by the infinite wisdom, and that was for manipulating the metals market, by their infinite wisdom, are still allowed to be the custodian of the world's largest silver trust. BlackRock is right there with it. And the question that I would say to people, if this isn't a conspiracy, is it? No, I don't think so. There are 8 Western banks, 8, that have held the largest concentrated short position in any of the 1,000 commodities traded on COMEX for about 30 years. 8 banks in the West. Now, why would banks in Canada, the U.S., and Europe suppress silver? Well, isn't that the West? And hasn't the West ruled the world for a long time? Go all the way back to when they were sailing ships across the ocean, long before anything, hundreds of years ago. It was still the West ruling the world with strong military, strong navy. Well, this has moved to where we are now, that if you are going to, it's not even about price, right? It's about realization that silver is needed, and it's a depleting asset because it's found very near the surface. It's called epithermal, like your skin is epidermis. Silver is found real near the surface. Big deposits were found forever ago. So they step on the price, not because they want cheap silver for weapons. It's that they don't want the world to know how valuable silver truly is and get crowded out of their trade. Because if there's a few thousand, well, let's say there's all sorts of different opinions. I was told there's silverwars.org, right? And they will tell you what the real numbers are, in their opinion. But I was told by a consultant for the DoD that there's between 13 and 14 kilograms of silver in a cruise missile. Now, a lot of people will disagree with that. It's very hard to find it. I've been told this personally, and Silver Wars will acknowledge this, and some say there's even more. So let's just say there's a lot of silver inside of these weapons. But, if there's 500 ounces in a cruise missile that costs $12 million, what the hell do they care if it's up $5 or $10 for? It's called inelastic. They don't. And it's more about securing the supply and not being crowded out globally of the trade. And that's breaking. It's breaking through deliveries. And it's interesting. There have been all sorts of reports that you can kind of validate through the Commitment of Traders report that the COMEX publishes, that the banks in the United States have, in essence, gone net long, exposing the banks in Europe, which is a whole different story. As to, fine line between conspiracy and reality. We don't need to go there right now, but I'll just simply say, Tom, if you're interested in pulling that string, research Tom Luongo and his feelings on Trump and the European aristocrats and how he feels that they were involved in a lot of the problems with color revolution and with perception of election interference, and he is using this to get back at them. Now, that's an interesting theory. put that aside, the bottom line is if the economic times is right, and the banks in the U.S. have largely flip-flopped, JP Morgan covering a 200 million ounce short position, as they claim, and you can see that it looks as though this is the case. Now, net long doesn't mean long. It means you could have 11 long and 10 short, you're net long. But they are extricating themselves from the short position, and because of deliveries that started at 5 years ago. I've been screaming about this for 5 years. I'm like, you guys, someone stand for delivery. This never happened before, and it's everywhere. You see strain in supply in London, massive strain. You see massive strain in Shanghai. You see massive strain here in the COMEX, where there is far more deliverable contracts than there are bars backing it. So this is a big deal, Kyle, and I will just simply say that the West has been able to hold down gold and silver for a long time. Silver for the military-industrial complex, gold because of a term called Gibson's paradox, which largely speaks to the inverse relationship between real interest rates and the price of gold. So as the West stepped on interest rates for a long time, this is the crux of all the problems. By suppressing interest rates, you're spitting on Mother Nature. And she gets you in the end, because when you suppress interest rates, where a couple of fat bankers say this is where rates should be, instead of letting the market dictate it naturally, you create distortions and misallocations of capital and resource, distortions in asset prices. What's your house worth at 3% mortgage rate? What's it worth at 6? What's it worth at 9? What's it worth at 12? What are all assets worth? If you have cheap money forever, low interest rates, why, you can build a bigger business, get another building, hire more people, build a new division. But what happens when rates go higher and the economy slows down? What happens when interest rates find equilibrium with real assets? And that's kind of the problem, where you have distorted asset prices to such a degree where people feel rich when the 401k goes up and their house prices go up. But what happens if rates went to 12%? Paul Volcker in 1980 raised interest rates to almost 20% to slow down inflation. What would happen to the economy right now if that happened? Can you only imagine? Stocks, bonds, real estate, the banks that are loaded with treasuries, the insurance companies that are loaded with treasuries. It's the great taking that Klaus Schwab talked about. It's poof. The whole thing goes just like that. And this is the problem, especially when you realize that it's a system of confidence, right? This country, after World War II, we were on a moral high ground. We've trampled it. And if you have a system that is not backed by gold or silver, or not backed by anything but trust and a strong military, trust is waning. It's all about the unwinding, if you will, of suppression that was done in an era of cheap money and trust in the United States. Both of these things seem to be waning. And how the cookie crumbles, I guess we'll have to wait and see. But I am not confident of a soft landing in any respect. And you have all of these things converging at once. This massive deal with AI. You have massive indebtedness. You have war. You have divisiveness in the country. You have all of these things. And any one of them could become an issue that people should really protect themselves